Good afternoon, everyone, or evening, wherever you might be in the country or the world. Let me do a quick sound check. And thank you, Daryl. I appreciate it. All right. Daryl, way to go. Thank you. Thank you. All right. Good to see everybody here. I see some familiar faces in the crowd already. So welcome, welcome, welcome. Tonight we are going to go over part two, actually, of the triple play strategy. Very cool strategy. Hope you guys learned some cool stuff. Got a lot to talk about. I have been profitable for 7 years in a row using this strategy, and I've been profitable actually a lot longer than that, but these 7 years have been documented through Simpler. So let's jump into why I love this strategy. And you'll see as we go through it, it's a triple play because we've got at least 3 ways to win, and there's 3 variations of that. So it's really very, very cool strategy. It's very flexible, which I really like. I know if you guys have traded with me, in the rooms or in bias, I like to be a little more creative with my trades. But these kind of trades that we're going to talk about, we can use them in all kind of different markets, especially curveball markets, and that's very important because I think we'll be seeing more of that. And as far, one of the first questions I always get is, well, what time frame do you usually do? Because my trades typically are more, I have kind of developed a hybrid income strategy over many years, and typically, 2 or 3 weeks to 2 or 3 months. Recently, I made one. I made $1,200 in less than an hour, and that was pretty cool. But let me show you what's really cool about that trade. This was a $1,200 win in less than an hour, but I only put $1,400 in the trade, and I went in at 10:22 in the morning. That was on May 5th, and I closed at 11:19, a little bit less than an hour later. Pretty cool. So it's a great strategy, very flexible, and of course, it can work on all different time frames. And we're going to go into that. And I'm going to show you how we can tweak it and use it in different variations. But first, I want to step back for just a second and tell you a little bit about myself. I know we have a lot of new people in here, and we have a lot of new people on Simpler. This is me. This is I believe this is in 1989 or 1990. So I've been trading for 33 years professionally as a career. This is a trading group that I had at Merrill Lynch. And the funny thing about it, and I know Daryl's listening, notice the 20-pound laptop we have here. It's a compact, it's like 3 inches thick, and the battery runs out in, 20 minutes, that kind of thing. And that's how we would track. We're going over spreadsheets of a big portfolio right there. But anyway, that was back when I had hair and, before 2 kids and before trading for 30 years and all that kind of stuff. And I learned how to get around the stress, thankfully, earlier on in my career. So that's what I hope to help you guys do. But what's really cool about this, let's talk about technology. This is old school technology here. This is what I literally used to use to buy and sell things. This is actually, it's one ticket, but you can do the buy side or the sell side. And I would come in here when I decided what I wanted to do. I would do the quantity, what exchange I want to route to, what branch I was in, account number, all that kind of stuff. My registered rep number, you live and die by that. You had to have that. And then this was actually the triplicate kind of carbon copy paper. So I'd tear off the top, and I would go over. We had the tube on the wall that sucks up the things like they did in the banks back in the day, and it would shoot it over to the other side of the building to a wire operator who would physically type in the order for me, and it was routed to an exchange. And then I would go get a cup of coffee and go, walk down the hall and stick my head in and talk to some guys, whatever. And about 10 minutes later, I would go up to the wire operator, and we had little mail slots, and she would have my carbon copy, and she would timestamp it with one of those, like a stapler kind of thing where you timestamp it, stick it in the slot, and I would look at it, and I would know what I got filled, what price I got filled on. And back then, of course, we were trading in, 8s and quarter, 3/8 and 5/8 and all that kind of stuff. Very, 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 very different than what we're doing now. And this is a good thing because one, I've had exposure to, from the Stone Age all the way up to what we've got now. And now with toss, I mean, it is lightning fast. If you're new to trading and you just open a Tastyworks account or a toss account or something, I mean, you just think that's normal, but it's not. I mean, this is just, light years from where it used to be. And that's just the way it was. Now we have so much more order flow. I know people think we don't have much liquidity now, but try doing it back in the day when you were doing paper tickets with $8 wide spreads and that kind of thing. It's a different world. But we have all this on the plus side to our advantage, right? So that was then, and this is now. This is me with a lot less hair. I'm married to the Fibonacci princess here. She works for Carolyn, the Fibonacci queen, in the Fibonacci queen room. And those are my two beautiful daughters. And we recently moved from Austin, Texas to St. Simon's Island. And this is where we live. Beautiful beaches, and it's awesome sunsets and all that kind of stuff. And we love it here. It's just really, really cool. And a bit of trivia real quick, right over here on the other side of the island. This is St. Simon's. There's an island over here called Little St. Simon's. And the reason I bring it up is because guess who owns Little St. Simon's? It's Hank Paulson. And Hank used to be he was CEO of Goldman Sachs. He's also the U.S. Treasury Secretary. And so he bought that island, being the Treasury Secretary and Goldman Sachs CEO must be pretty lucrative, right? It's about 11,000 acre island. So he bought it and he actually turned it over and made it into a permanent nature conservancy kind of thing. Really cool, really cool. My in-laws also live on the island here and they've been over there and he's there. He and his wife are there and, they met him and all that kind of stuff. Pretty cool. But then the other cool thing, and then I'll get past the trivia. This is just interesting. So over here is Jekyll Island. And Jekyll Island is where the first Fed meeting happened. And it's actually where the Fed was, the legislation was drafted up to create the Fed. And that is a really, really cool island. If you've ever been there or if you ever come this way, you should definitely check it out. It's where the home of all the Rockefellers and JP Morgan, the Vanderbilts, and all that. They have their summer houses over there. Their 15,000 square foot summer house. And they're all still there. It's really, really cool. So anyway, that's me and my personal life. But getting back to trading, I actually started trading in 1989, right there. And I was licensed and all that kind of stuff in 1989. So I've been through all this, right? And it's funny when I think about it, I have literally since 1989, unless I was out of town or whatever, I basically have seen every open and every close for 33 years. It's kind of crazy to think about in those terms. But the reason I want to show this is just, I want to put everything in perspective here. And if we look at this was the dot-com, bubble and all that kind of stuff. That was in the year 2000. But what I want you to notice, check this out, from here, from the top to the bottom. So we sold off for 3 years and you would sell, you sell the rally, sell the rally, sell the rally. Kind of here, buy the dip, 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 and it never stops, right? Same thing here, except we sold this for 3 years, not 3 weeks, 3 months, 3 years, right? Then we finally bottomed out. And then it took another 4 years to get back up to where we were right there, right? And then guess what happened? Housing crisis, boom. We sold off for 2 years straight again. And then boom, we turned back up and guess what? It took another 4 years to get to where we were here. Same price on the S&P. This is S&P 500, right? So the reason I point all that out is that can happen again, easily. We're going to talk about the market a little bit more, and I'll go in a little more detail on that in a second. But let me point out one other thing here too. So this is the S&P. That's been crazy, but check that out. The Nasdaq's even more crazy, right? Same thing, same time frame. Here's where we topped out. Now this was the dot-com, blow up. Same thing. Took about 3 years to bottom out. But here's what's interesting. Check this out. That red line is a voodoo line, fire line. We were at 5,000 on the S&P, at the bottom down here, we're at 1,000. We lost 80% of the value of the market right there. We went from 5,000 to 1,000, right? So if the same thing happened here, we're at 14,000. If we lost 80%, we would be at 2,800. And, I don't think that's going to happen, but, is it possible? Absolutely. Right. And we have to be careful of this stuff. We all know we're getting into some crazy territory with all this stuff. And again, we'll talk about a little bit more in a minute. But but so these are good times and bad times. I made a tremendous amount of money through all this. And notice, I can't zoom in on this because it's a screenshot, but notice how vertical this thing was. I mean, it was vertical for 6-8 months, and we were making money hand over fist, right? And of course, we were all like, oh, it's going to end, but not yet. It's the cakewalk thing, whatever. And then when it ended, it just didn't stop ending for, for years, literally crazy, crazy, crazy stuff, to think about. So when I think about that and I bring it forward to today, and I know you guys have heard John Carter say this, he's a closet bear. I am too. And that's the reason. If you ever trade through that stuff and it doesn't last, here we have a sell-off now. One of the most brutal sell-offs we've had in recent history. And it lasts, 2 months, 3 months, and it's over and you're back up here. It's mind-boggling, right? So anyway, if I look at this, is it fear or opportunity? And all through this, people were getting wiped out and people were making millions, and depending on what side you were on and, what day you were long or what day you were short and all that kind of stuff. I mean, for me, it's always been about opportunity and looking for the opportunity, especially last year, with all the wild swings and all that kind of stuff. So last year, of course, I was using these strategies. How'd I do? Well, for the bias account, which is an account, if you're not familiar with Simpler, that's, an account I run here at Simpler. We almost triple the account, and I'll show you that in a minute. And my personal accounts were even better. I had one account that did 7x. That was probably one of the better years I've had in a long time, but it was pretty good. But one strategy made up over 60% of the wins for me in 2020. And I bet you can guess what that was. But first, let's talk about trade strategies, because it's very important. I'm a structural kind of guy. I have an engineering background and I'm a math guy, so I like to think about how trades work and why they work and all that kind of stuff. We know nobody can predict the market direction, even intraday, you just can't, right? And we know that different type markets give us different risks and different opportunities. So we need to know what trade strategies to use. And when you first start out, right, we typically start out, at least I did, with long calls, long puts, things like that. And then you kind of get used to spreads and debit spreads and then credit spreads. And then, two credit spreads are just an iron condor. And because when you first look at an iron condor, it's like baffling, and in butterflies, same way. Diagonals and calendars kind of round it out. Those are your major type strategies. And you could throw in, back ratios and straddles and all that kind of stuff. But these are the core strategies. But, they're all valid. But you've got to know, if you want to be consistent, which we all do, you've got to know when to use each one and how they complement each other. And your strategy really needs to have an edge. And, I have a strategy with a built-in edge. And if you had one, there was a consistent go-to strategy that you could lather, rinse, repeat, use it over and over and over, would that make a difference in your P&L? And of course, we all know it would. And more importantly, your stress level. And that's very important. The mental side of trading is real. I mean, we all know that, right? So back to the question, and I kind of already gave it away, but during all that crazy stuff, what worked, and it of course was my triple play calendar trade, and variations of that trade, because there's more than one trade and there's more than one way to trade it. But the reason it worked is that the trade structure takes advantage of price moves and volatility. And so if I'm looking ahead, what am I expecting in the future? More volatility, more price moves, right? So again, back here to the S&P, if I'm looking at this and I'm trying to figure out now, what am I seeing, opportunity or fear? I kind of see both, because I know what's coming. We all know what's coming. And is it going to be something like this, or is it going to be something like this, or something, like this? And we don't know. And we won't know, because that is kind of the nature of an actual, a black swan event. Nobody saw COVID coming. Nobody sees, most of the things that happen, right? Ahead of time. Now we can prepare and hedge, and we're going to talk about hedging too. That's a pretty cool part. But I see this as opportunity, but again, I know what's coming on the other side of this, right? So, you might say, oh, that'll never happen. Well, you recognize that chart? That is our old friend Bitcoin. Check it out. 65,000 down to 30,000. That's a 40% drop, and everybody thought this was going to 250, 300, just instantly. It's just never going to stop, right? Always goes up, right? Only goes up. Well, and I'm a fan of Bitcoin. I think it's, going to go higher and all that kind of stuff. I have no idea how much lower it's going to go before it maybe stops kind of free falling. But, you get the point. Anything that trades is based on human emotion. There's just one person on one side and one person on the other side. One person is greedy and one person is fearful. Oh, I think it's going to go down, I'm going to sell it. The greedy person says, I'll pay you whatever you want. I want it. And that's what drives the price of cars. That's what drives the price of any product you buy and sell. That's what drives the prices of Bitcoin. That's what drives prices of stocks we trade and indexes and all that kind of stuff. You guys know that, but I'm trying to make a point here that this is a little extended to me. And again, I'm not saying, we're going to crash and all that kind of stuff, but I'm saying there's the right set of circumstances with, $1 trillion here, $1 trillion there, 2 or 3 trillion more, 3 or 4 or 5 trillion more, that kind of starts adding up after a while. Somebody's got to pay for that at some point, but the bigger problem is the interest rates. You take a $20 trillion deficit, or fill in the blank, whatever it will end up being, at, just say we're financing whatever, house, whatever. And we're all cool with the rate at 3%, but when it goes to 4, it's a variable rate. It's not a fixed rate. So what happens? Well, that debt, you just added on $10 trillion worth of debt on top of that. That's when big problems happen, and that's when the cracks in the ice turn into fault lines and all that kind of stuff. And again, it may not happen. GDP picks up enough, it kind of offsets that. Maybe all this inflation we're seeing is transitory. I keep hearing, well, it's transitory inflation, it's nothing to worry about. But and those guys are a lot smarter than me. So I'm just saying that with irrational exuberance, that's going to give us some opportunity. And speaking of irrational exuberance, do you guys know who said that and when that was said? That was old Alan Greenspan back in the day. I know some of you guys probably have been here. I was actually watching that when he said that. And, I have people now that, you talk to random people and they say, oh, the market, is just on a tear and blah, blah, blah. And it's funny because when you ask somebody or talk to somebody that actually really doesn't watch the market, they just look at their 401k statement at the end of the month. The market, the Dow might be down 800 points on that day that you talk to them, and they'll say, man, the market's doing great, isn't it? And because they have no clue, because they don't do like we do and trade every day and watch it and try to figure it out, right? But anyway, you guys get the picture. Curveballs are coming. I truly believe this, and the way that we take advantage of that opportunity is to be ready to take advantage of the price and the volatility swings that are coming this way. And if they don't come now, they'll come later. They will come, so why does all this volatility matter? Think about the VIX and the fear index, right? Why it's called a fear index and why we even have it. The ebb and flow of volatility is always there, and it directly affects every option strategy because it actually creates the pricing of the option. So you cannot get away from it or around it, right? So it's crucial to understand how that volatility works and how to put it, to your advantage. So how does that market movement create, the opportunity that we're looking for? Well, if we go back to, again, and again, everybody does this. I did this. I think it's the smartest way to do it. When you start trading, you think kind of in one dimension. You want to buy something and it goes up, or you want to short something and it goes down. And, that's still the basis of everything we do, really. But that's kind of one dimensional, right? So when you take that price movement and then you add the second dimension of volatility, now you have a two-dimensional trade, right? And for this triple play, if you can set it up correctly, then you can take advantage of time, which is your third dimension. So you can't control price, you can't control volatility, and you can't control time. So why not try to put them on your side? And you have three ways to win on a trade. I mean, that's about as good as it gets, to me, in my opinion. So we know this is based around the calendar structure, right? And the calendar started out back, back when the dinosaurs were walking around, and we used to call them time spreads, and that's essentially all it is. But we used them for, neutral trades, reversion to the mean kind of stuff, and I still do to this day. Absolutely a big part of what I do. But it's a very flexible trade, and over many, many years, I have figured out and learned how to dial it up and dial it down. If I want to add more risk or more opportunity onto a trade, there are ways to do that, right? So it's a very flexible trade. So we can structure this going from a neutral trade to a bullish trade or a bearish trade, either one. So we've got three ways to play it, and we've got three ways to take advantage of that trade, right? So how do we do that? And this is the fun part. So let's jump in here and look at some ideas. So this would be a neutral setup. This is the rut, and when you get into a tight range like this, you can do the same thing. I could put in Netflix up here. I used to do this with IBB, but you're back and forth, back and forth, back and forth. Price is not really going anywhere. Volatility is back and forth, back and forth. This is the time you can make money on these things like that, even on smaller time frames, like this. So that would be your basis for a neutral trade. When, like, for example, when Boeing had the airplane crash and the problems with the jet design and all that kind of stuff, and the trade the Boeing kind of stalled out for a while, then you use something like that, because it's not, you're not buying calls on it anymore, because it's going to be hanging around and not doing anything for a little while. Perfect, kind of strategy for that, right? On a bullish play, most people will say you can't use that for a bullish play. Well, what about this? This is Google. This is earnings, 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 earnings. It's a one-year chart. Every time we go into earnings, you get a rise in volatility, rise in volatility, rise in volatility. Here we didn't get as much, but you get a little rise in volatility. And then the vol crushes after earnings, vol crush, vol crush. We all know that, right? So this will continue to go up. So we look out here to try to set a bullish type trade with an increasing vol to take advantage of that price and take advantage of that rising volatility. And it works pretty well. I really like doing these earnings trades with these calendars, and we've done them on Google, Nvidia, Amazon, Apple. There's some criteria around the way you want to structure it, but it works pretty well. And it's just another, it's another avenue to go when you're either not sure and you're trying to take advantage of one or both aspects of a trade like that, right? So another bullish trade. This was a scalp I did on the rut. Now I scalped this off the IWM, and as you know, I'm looking at fib levels on IWM because actually the IWM is more liquid and the levels are a little bit stronger. On the IWM, same way you would use the ES to scalp the SPX, for example. What we came down here is a 30-minute chart, a lot of support. I was trying to get a bounce off of this, and lo and behold, there it is. I put it together. This was the trade that I just showed you guys, actually. Tiny move. It was up. I closed it for $1,200, but it kept going. If I would have kept it, and it would have come up here, worth about 10,000 bucks, but it was a scalp for me. That was all I was trying to do. But again, this was the exact trade that I did. Bought it for $1.40 and sold it for $2.60. So that's pretty cool when you can do that. The next one is a bearish fade. And this is probably my favorite type setup on one of these. I'm looking for the pullbacks, the pullbacks, the pullbacks, the pullbacks, pullback, pullback, pullback. So this is 1, 2, 3, 4, 5, 6, 7, 8 times in the last year. Then you get these micro or mini kind of pullbacks here, and those happen all the time. And we trade those a lot with the weeklies, and and they all work. So you can trade both sides. If you're the most bullish person, this is a bullish, bullish, bullish chart. But you know how it works. You take the stairs up, market takes the stairs up and the elevator down. Well, if you have a net sitting here waiting for that elevator to come down, you catch some fish. I'm living on an island now, so I'm always thinking about fishing. Um, but it's true. And this, we can buy calls and make money up here and plant some kind of trade down here and catch this on the downside. And then we high five, and then we start the process all over again. And that's what I do over and over and over and over and over and over and over. And it's been very successful. It's been very successful. It's also been very consistent for me. The next one would be a bearish. This is what the trade actually looks like. If you are on TOS, then you know about the Analyze tab. The Analyze tab is crucial to my trading, at least from my mental standpoint, I guess. Again, I have an engineering background. I'm a math kind of guy. And you can see all the Greeks here and see the structure of the trade. You can see the risk reward and all that kind of stuff. So this, on a trade like this, simple structure, it gives us a wiggle room to the upside up here, and then we can make profit up here. But I'm really trying to shoot for this kind of area, a fade back into here. So we've taken the stairs up, and we're right here. And then when we come down, we come back into here, into the body of this thing, and that's where we make, that's where you make the money. So it works really well. So those are the three types of, basic trades. But then we get a little kicker on this strategy, right? The strategies are perfect for hedging because it has a lot of exposure to volatility. And I can show you how that exposure works to volatility, and we're going to get into that a lot deeper as we go. But this is a really effective way to get an inexpensive hedge. And again, especially when we're pushing all-time highs. So let me show you how that would work and how that would look. So here is an example. I just put this together. This was a couple of weeks ago, I guess. I was trying to get something for 5,000 bucks. I did 7 contracts at $7 is 4,900 bucks. On a, this is a fade trade. Maybe we get here, maybe we don't. This T+1 line goes up. We can make money here, 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 here. We overshoot it. We can make money here, here, here. So that's a big, again, we're casting a big net out here, to go back to my fisherman, analogy. And we are all, even if you don't know anything about fishing, as traders, that's the best analogy that I can think of. We go every day, we go fishing, and we fish in the same spot every day, being the market. And, we try different bait or whatever. And some days you catch more fish than you know what to do with. And some days you strike out, and you don't catch anything. And some days you're back in the truck in the water and you forget to put it in park, and truck goes in the water and costs you some money, right? That kind of thing. So, think about it in those kind of terms. But let me show you how to get more bang for the buck out of this. This is a simple hedge right here. What if we want to look at NDX, right? Just NASDAQ. It's, it's up, and maybe it pulls back a little bit. Maybe it doesn't. And this chart's maybe, I don't know, several days old. But let's just say, we want to pull back, and we think it's going to happen pretty soon. Where will we target? Well, these are voodoo lines. I use them a lot. Let's just say we're going to come back down to this green line, which is a tree line. We've spent a lot of time on the tree line right here. Let's just say we're come back here. Well, what's that number? 12,870, right? So let's say it's going to happen soon. All right, let's go to July, and remember that number, 12,870. That is right there. So if we pull back to here, we'll make money, along the way down here. If this turns into something bigger, we got a lot more profit potential. Look at that. There's $150,000 of profit potential in there, right? We've got to come down here, take that level out, and get down there to it. But that's a lot of bang for the buck, right? Even here, we make really good money, right? So that looks pretty cool. But what if we wanted a real hedge? deeper downside correction hedge, right? NDX. What if you said, you know what, Bruce, you're wrong. The market's going to keep going until October because it always crashes in October, right? Okay, all right, I'm in. So where do you want to target? Well, it's going to come down. It's going to be big. And we're going to target this fire line down here where we double dip or double hit here, and we spent some time down here. So this is reasonable. So let's go out to October. What's that number? 10,607. 10,006. All right. Well, how do we do that? All right. Check this out. Let's go to October, and guess where we're going to put our center strike? 10,600. So if you're right, and we all make assumptions every time we trade, when you click that button, you have made your assumptions and you are running with it. I'm putting the quarter in the slot and I'm pulling the handle, right? If you're right, and this makes sense, and you end up down here, there's $400,000 or more in this trade, because this is a little flexible. You can actually make more than that. So that's a $400,000 trade. That would be pretty nice. I'd kind of like that. Well, what if you only get here and you only make 20,000? Well, okay, that's all right. I won't be sad. Here is 100,000, that line right there. 200,000, that line right there. 300,000, that line right there. So, again, I'm casting this gigantic net out here. And all I'm saying is sometime between now and October, might we pull back that far? And I'll catch it in my net, all the big fish. This is catching the sharks out here, right? When that happens. And that's a way we can set up a hedge on that. And, there are a lot of variations on that, and we can tweak it. We can make it cheaper. We can make it more profit in it than that. We can make it wider. We can go out further and all that kind of stuff. A lot of cool stuff you can do. And that's why it's so flexible, right? So who uses this strategy? Well, I can tell you professionals use calendars like this or variations of the calendar trade. And it's funny, I know I told the story before, but I was at a CBOE hedge fund manager meeting about 2 years ago. It was before COVID, so about 2 years ago. And one of the speakers, these guys, they manage billions of dollars. Boggles my mind, because back in the day when I was managing, I had a couple $100 million, and I was the man back then. But that was 30 years ago, But these guys managing, billions and billions of dollars, and he was showing, we're going to do this and this and this, and I was like, oh, that's a calendar. That's a time spread is all you're doing, and it is, But there are a lot of cool things you can do with it, right? And if you've been trading a while, you already know this. You know how they work. You know how to put together, but you may not know all the flexibility or the creativity that you can get out of one. But if you're newer to trading, it's a core strategy you gotta have, right? It's just one of those strategies you just gotta have, right? It's a multi-purpose trade, and we all have different tools in our toolbox. And this is your, that's your iron condor, and this is your calendar, and this, I don't know what this is, your butterfly, and this is long calls and puts, and maybe this is I don't know, straddle or whatever, but you get the point. I've used the analogy of golf clubs and a golf bag before, tools in a toolbox. I mean, you get the point. You got to have different things for different type markets. So does it really work? Well, it has worked for me for many, many, many years. The point is that we all want a lower left to upper right, and it never looks like that. It tends to look like this, and we know that, or it tends to stair step, and it looks great. Then you take the elevator down, and then you start stair stepping back up, and maybe get lucky, and then you take the elevator down. The point is you want to start here and end up here, in your P&L. And, I've been able to do that for, documented for 7 years in a row here. And again, much longer in other accounts. But let's take a look at some of these trades. So check this out. Here's the S&P. Again, beautiful chart. I mean, this thing is nothing but net. I mean, that's great looking chart. It's been great, right? So you could have, if everybody has their crystal ball and it's working correctly, then way back here, we buy a bunch of calls on the S&P, and we go to the beach, and we come back here and we cash them all in, right? And we're all, buy private island kind of stuff. But, nobody knows that, and I'm being facetious, but, this happens along the way, right? So how did I do trading this 1 year chart? that's exactly how I traded it. And these are the actual trades. So look at this. I mean, 250 bucks, 1600, 900, 1200, 700, 500, 750, 800, 1200, 1000. I just recently closed another one for 625 bucks here. I hadn't even had a chance to add it into the chart, but it's right here. Just closed it, I don't know, recently. But the point is singles and doubles. All these are on the S&P. So these are the actual trades. And in bias, I know I'm talking about bias a lot, but these are the trades that are documented, right? Or these type trades. We do other type trades in there, of course, but these are the variations of this triple play strategy. So when I started bias 7 years ago, I started literally with trade number 1, and we're up to, this is that one that I just added in for 625 bucks. So we're up to 800 and about 825 or something like that. But this one, there's a 250, and you can see 1600, 900, all that kind of stuff. But what's more important, 2 days, 12 days, 2 days, 8, 8, 3, 2, 8, 5, 12. Most of these are weeklies. The percentages, 3, that's nothing to get excited about. 27, nice. 21, 10, 12. This is very average. So this is 9,625 bucks. Again, these trades, you got to decide what type trader you are, and I'm serious about that, because if you have the need for speed and you have to be trading in and out and in and out and in and out, and you make 40 trades a day every day, this can still work for you, but you need to put this on the back burner and let this work for you while you focus on other stuff, right? For me, this is kind of the core side, and I still put these things on the back burner and kind of let them do their thing. But they're singles and doubles and singles and doubles, right? So the 9,625, the average, I went back and added all this up. The average cost on these trades was $5,610 is what we averaged into each one of these trades. And so, you can see there's not a lot of money tied up to get this. And it's just, lather, rinse, repeat, lather, rinse, repeat. And that is, that's what I like to do. Here are the actual trades again. They're all numbered. This is from the spreadsheet that I have excuse me, on the bias dashboard that lists all these things. And again, we have some losers every now and then. But the point is to be, singles and doubles and be consistent, because I'm telling you, if you've been trading a while, you already know this, but over many years, you've got to be consistent, or you will not make it in the game. You might be the hottest hand out there and you're killing it. At some point, your luck will run out, trust me, because nobody can predict what the market's going to do and all that kind of stuff. We know that, right? So singles and doubles are going to be critical to long-term success. And I'm assuming everybody wants to, either do this for a living, quit their job, do it for a living, or retire and do it full time, or whatever your goal is. Everybody has different goals, right? But I think everyone should focus on building up the account, and as it gets bigger, you take a little bit larger slice and maybe devote that to doing more home run kind of stuff. But the core needs to be, this is kind of more of the core stuff to get your singles and doubles on, and that's what wins the game. Getting on base is what wins the game, right? So here are the numbers for last year. And I keep coming back to there. Now we started with $25,000. I take it back down every year at the end of the year. So we started with 25,000, and we ended up making 45,000 on 25,000. So the account value was about 70. At the end of the year, it was about 71, 72,000, something like that. And then here's a month by months, and you can see that was big, but 2,000, 3,003, 2, 3, 3, very consistent. There's 9, that was a big one. That was, I don't know, that was one of the big moves down, but 1,000, 4,000. Anyway, $5 there, woo, but we were positive. But anyway, that's the whole point. And if you think it was all, rainbows and unicorns, it was not. Everyone has losses. That is part of trading, and that's probably the number one thing that I see. And I'm not talking to you guys, but just in general, newer people expect to not have losses. And even if people, and the reason I'm saying this is because when I was at a couple of different firms. I don't even know how I did this. I really enjoyed teaching, but I don't know how I got nominated to become the options coach and trainer to the new trainers. The new portfolio manager guys would come in, and I was the one that was signed to train them. And they would think, I'm awesome, right? I'm gonna make 10 million bucks and I'm not gonna have any losses. And I'm like, you need to cool your jets a little bit there. Everybody has losses. That's the point. We know this, right? So here's, some of the losses: 350, 625, 315, 560, 800, etc. And here are the trade numbers. These are the bias trades, and I really try to keep them at a minimum. Yes, we've had some that are bigger than this. Most are actually smaller. I didn't even want to list the ones that were, $100, $150 or something like that. This is kind of generally what we can tolerate, right? But we want to cut our losses. And you do that with any type trading you do. You got to keep things in, the math has to work again in order to stay in it long term. So let's jump back over. All these have been S&P trades, but let's look at some other trades real quick, and then we'll get into some other stuff. But here's a trade we did in FedEx. I made $1,150 in that. And these are just all over the last year. That was actually was a low cost trade. We made $1,150 on in 18 days. That was actually a run into earnings trade. Amazon 833. Amazon works pretty well for this. It does have some, Amazon can move around a lot, but so I kind of a little hesitant for the bias account to use this on my personal stuff. I do, but this one again, low cost, big high return, made 73% in 9 days. Rut, again, pretty consistent. All these trades, we price them or we size them about the same. When the account was 25,000, I was sizing an average trade at $5,000 and maybe a little more, maybe, 6. Now the account's at 50,000 and we size it anywhere from 5 to 10, maybe 12,000. So I'm willing to put more dollar amount percentage wise in a trade because of the structure we can create from some of these variations that we do is really cool. Here again, here's the rut. Again, the number is 16% one day. I came back in 2 days, did that 9%. This took 17 days. So it's about $2,000 there. Again, singles and doubles add up over time. Here is a mentorship that I did. I do a mentorship every year. This was in January this year. And we did 10 trades, and one trade we did not get filled on. So we had 9 official trades and we had 9 winners. I did not have a losing trade in the mentorship. And these are the variations of the strategy we're talking about tonight. So we made 2,000 on that one. That one, yeah, not a lot, but it's positive. So we made $4,800, right? Again, singles and doubles. And these are just the trades of the style we're talking about tonight, right? So the reason that I see opportunity, and I continue to see opportunity in this trade, it's consistent, it's repeatable, lather, rinse, repeat, and it's easy to customize. And that's very important. So you guys can tell that I'm a big fan of this. And, the other thing too, it is easy to use. A very straightforward trade, right? I don't use a lot of heavy indicators. There's nothing you got to run out and get. In doing any kind of trading, you have to be pretty familiar with technicals. And, I can do this because we're throwing such a wide net in most cases. I'm using moving averages. I'm using Keltner channels, basic things. I do use voodoo lines, and I'm a big fan of those. Very helpful, not required, but very helpful. And of course, Fibonacci levels, and I use those from Carolyn and Tammy, but anybody can run fib levels off of anything, right? So again, we're going to do a class on this. I do a very detailed step-by-step instructions on this, and I know how much opportunity is in this, but you got to know the details of what to watch out for, because curveballs are coming, right? We know they're coming. And again, I may be wrong. I said in the video today, I did the nightly videos today, and I said, we're going higher, and and I'm bullish, but I know it's coming at some point, and maybe it's 2 weeks, 2 months, maybe it's 2 years, maybe this thing just keeps going. Doesn't matter. We play it both ways. I can do bullish, I can do bearish, doesn't really matter. But what matters is not chasing your tail, with your trading. Again, because I have trained a lot of people over many years and mentored and all that kind of stuff, I see a cycle, and it is, Bill comes in and he inherited some money and he's got $1 million and he's trading and, pedal to the metal, and he's going to make 10 million bucks and then go buy a big yacht and sail around the world. And then, 6 months later, I'm go, where's Bill? And oh, he blew out his count and he's gone and he's not coming back. Gotta be careful. It's trading is not, it can be hard. We know that, right? Be consistent, right? That's the main point. You got to have an edge, right? I went back and I was just I literally was trying to think of how many of these triple play trades that I've done over my career. And it's, I don't know, many tens of thousands of trades, right? And, we have a very high win rate on these trades. And, with any trades, there's twists and turns that you got to do, that can make or break it. And you got to know when to do those and all that kind of thing. But it's critical to get the setup right. And that is why I'm here, because once you get the setup right, then you have your peace of mind for whatever the market throws at you, right? And I was looking at this, and I did not take this, at my house or down the street from my house. I wish I did. There's a cool picture. I thought about that, and I was like, peace of mind, because you need to be calm when you're trading and be methodical and, think it out. Don't, in my opinion, gunslinging, you can make money, gunslinging, but it's a lot more sleepless nights and anxiety and stress and all that kind of stuff. I'd rather have peace of mind, right? Here's another trade we did a while back. This was a bias trade. About 12 days, we were up $1,350. That is a structure we use sometime. It's a pretty cool trade, very wide. That's why I don't mind putting more money in these type trades. But as far as the trade goes, I was thinking, again, I'm a methodical engineering thought process guy, step by step. So, I was thinking, what are the top 10 reasons that I would want to use this? Number one, probably is because it's a very simple and straightforward setup. Number two, we're throwing a big net, so we really don't have to be too precise. If we are trading, for example, a butterfly or something like that, we got to be pretty precise, because you're kind of threading that needle on a butterfly. And I'm a huge butterfly fan. You guys know that. This one is a very theta friendly trade. That's very important to me. If you don't know what theta is, you need to. You've got to know what the Greeks mean. Bullish, bearish setups, we can dial it up or down. I always use multiple trades. For example, I will typically have weeklies going out 3-4 weeks in advance, and I will keep 3 or 4 trades on at once, and then maybe sprinkle in some longer term stuff. That's just part of it. These are easy. There's easy trade parameters because they're very similar. It's a lather, rinse, repeat trade. So you can use them at different expirations, and they're easy to monitor and, and manage as you go. And then number 10 would be, it is really an effective hedge for us if we want to do it. But any strategy that we use, you got to think about this and put screenshot this or whatever. This is important. You got to have a trade plan. Again, I talk to many traders all the time, every day, and most don't have a trade plan. At least have a plan for the specific trade you're doing. As far as how's volatility matter to this trade? What expiration am I going to use, and why? Why'd you pick that expiration over this expiration? Always try to give yourself a little more time, but you also got to make assumptions. Remember that this is going to happen in this length of time. What strikes to use, which ones are better, why, when do I enter? I don't know. Do I use puts or calls? If you use a butterfly, do you use puts or calls? Well, depends. You in the money or out of the money? Does it stock pay a dividend? Very important. Got to know that, right? What's the edge in the trade? How specific is your plan as far as profit and loss? That type of things. I detail out all of the steps that I use on a trade, and I'll show you guys how to do that too. How to set it up, how it works, why it works. I am the kind of guy that, growing up, I would get something and I want to take it apart and see how it works. What's on the inside that makes this thing work. Same way with trades, right? Why does this thing work? And how might I get in trouble? And how might I make it a little better, right? How to manage if you get in trouble. The best traders are the best managers. That's it. I mean, that's the truth. And that's in a nutshell. You got to be able to manage your trades. And I'm not talking about manage losses. I'm just talking about manage the trade. Maybe, as over the life cycle of a trade, maybe we beef it up. Maybe we tilt it one way or another. There's a lot of things you can do if you know how to do it, right? So as far as trading success, I mentioned this earlier. You guys know that sometimes it's easy. Not often, but it's sometimes easy and sometimes, and most of the time I would say it's hard, and sometimes it's very hard. I know you've probably, I keep mentioning JC because it's just these things that resonate in my mind that he said over the years. He said he can count on one hand all the trades in a year that work right. And when, what he means, and I say the same thing, is that you made some assumptions and you put the trade on, you got the best price going in and you get the best price coming out, and it worked in exactly the time frame that you thought it would, and you made exactly the money you thought you would. Because all those variables are, you're riding the unicycle juggling bowling pins, right? And most of them don't work. It takes longer. You get a zigzag, the market tanks, whatever. You have to pay up to get it, and you don't get as much as you thought you would when you get out of it, that kind of stuff. We know that. So it's the law of averages. It always has been, it always will be, right? So most people have trouble being consistent because they don't have a go-to strategy like the one I'm talking about here. The second reason is not being able to adapt to market conditions. And again, changing market conditions, I see that being a constant in our future for the foreseeable future. I don't see that changing, really. But again, you got to have a strategy with an edge, right? Especially when market conditions change on you. And the thing that I can't stress enough is trading always evolves. You guys saw the 15-pound compact laptop computer that I had, and now I can do the same thing, literally on my cell phone, sitting at a red light, in the car. And it's crazy how things evolved. And I read this, and I truly believe it. It said technology will change more in the next 10 years. It will change more in the next 10 years than it has changed in the last 100 years. I mean, think about that. How much crazy stuff we've already seen. I mean, we're already talking about having all electric vehicles, and, it'll be the Jetsons and all that kind of stuff, right? So we have to, consistently and continually improve our skills, myself included, everyone. You can't stop. It's like you're a doctor and you're a heart surgeon, and somebody wants to have some heart surgery and they say, have you tried this new procedure? Oh no, I haven't looked at new procedures in the last 10 years. Well, you're not going to do very good, right? Same way with trading. You've got to keep learning, which means taking classes, learning, getting mentors, that kind of thing, myself included. And I have probably paid, I never added up because I really didn't want to know, but I know it's over $100,000 that I've paid over my life. I hired a couple of market makers on CBOE to personally train me, and I've taken a boatload of classes and courses and all that kind of stuff. And and it's been worth it. Of course, it was a lot of money back then. These guys used to charge a lot more because nobody did private coaching back then, but I was willing to pay, and it was worth it. But you got to learn to adapt and improve yourself, to be consistent, to be a better trader. Again, it never stops. Unfortunately, it never stops, but that's a good thing for me. I like learning new things. But you've got to add this trade to your options toolbox. It's going to expand your ability to catch these moves that you might otherwise miss. And again, this is, what I'm talking about is to have a trade, or having trades that are kind of, there is no real set it and forget it trade. Not really. There's set it and put it on the back burner and kind of keep an eye on it in case it gets hot and boils over, that kind of thing, and that's what these kind of trades are. These are not your home run. You're not going to go out and buy a Ferrari every week on this kind of stuff, but also it is a low stress thing. And that's the name of the game, honestly. So all that being said, I'm doing the triple play strategy. Doing a class on June the 5th, which is next weekend. Yes, next weekend. This is going to be a cool class, right? We've got 3 different packages. Let me go through this real quick and I'll show you what's included in here because it's pretty cool. So the basic package here is $497. I think this is dirt cheap. It's a 4-hour class. And if you guys have ever taken a class from me, I jam pack it full of everything you need to know and tips and tricks. And I'm very detailed because of the engineering background. It's just unfortunately the way my brain is wired, because I want to know what's step 1 and what's step 2 and what's step 3, that kind of thing. And so this will be the class itself, 12 to 4 on Saturday. It will be recorded. With that comes the bonus. This is the Analyze tab. Again, if you're not familiar with that, this is really cool. It will dramatically help you in your trading, I firmly believe, and it's free. The Analyze tab, I did a class on it. I did one actually about 2014 or something like that. And then it has been upgraded several times. So I did one fairly recently with tips and tricks and how to use it and all that kind of stuff, and go over the Greeks and that kind of stuff. But it really can help you spot risk and help you spot opportunity in your trades. Very, I can't really trade without it. So that comes with it. Then we know the fastest way to make these tools your own is to put them into practice. You can think about it this way. If, I don't know, I'm not a huge golfer, but let's just say you read 10 books from Tiger Woods, right? And, or, fill in the blank, whatever your favorite golfer is. And, you decide you want to go play and Tiger Woods is there. Let's play, and do you think you're gonna be as good as him without, with just reading the books? Probably not. You need to go out there and swing 10,000 times on the practice range and hit balls like he has, right? Same thing with this. You got to put these things into action, to get better results out of them. Now, with reading the books, you get the tips and the tricks and all that kind of stuff, but the only way you're going to really know it is when the rubber hits the road. You actually do the trades. So the pro package here, we're going to throw in 2 more days of live trading. Again, this is ask all the questions you want to ask, and we're going to go through the setups and why are you doing this and why are you not doing that. We're going to look for and set up trades. And man, I didn't realize I lost so much hair, but sorry, I got sidetracked. On all of these trades, I send out alerts, of course. I document all the trades all the time because I want everybody to see them. And we'll send out alerts if for some reason it comes up that you can't make it to the live trading. You can still get the trades, on the alerts like this. You will still have access to the live trading as soon as as soon as it's posted, within an hour probably or whatever. But this can really help you. Now, the elite package, this is what I would recommend because you get 2 extra days of live trading. We're going to dive even deeper. And the main reason is if you have 4 days of live trading and you add on 2 more, you're going to get 2 more days to get more trades. And the more trades that you get on, the potential to make more money, right? Again, all the questions that you want to have answered and all that kind of stuff. The more we do this together, the better you get. It's just like, if Tiger Woods is out there or whoever, fill in the blank, and they're out there actually with you, showing you, hitting the ball this way and turn your, your hips this way or whatever. It makes a difference, right? It really does. So, I think you should do the live trading. To me, that's the best deal. I didn't know this until the other day, but we now accept PayPal credit. That's pretty cool. You can do 0 interest for 6 months. Very cool. I love PayPal. I love trading PayPal too, actually, as a side note. But, if you've liked what you've seen or curious, think this might work for you, I mean, they're not complex. It's a very straightforward strategy, but there are a lot of variations to this trade, as you can see, right? There's no way I can show you the details in 45 minutes. It's just not enough time, right? And if I did, it would be a disservice because there would be the next day it would be like, well, what do I do if this happens? Or what about this? And I'm not there to answer, So I've tried to show you guys what I'm talking about and how it works and how it's worked for me. but the class and the live trading is the way to do it. So we put all that together, and I think it is a great way to learn it and really learn it good and have it down. So see how you can make the strategy your own. My goal is to have everybody understand this enough through the class and the live trading that you can go out and find trades on your own and do all that kind of stuff. Again, if you've done a class with me, you already know this. I'm very detail oriented trading plans. We're going to do all this stuff together, and you'll have the recordings and all that kind of stuff. But the main reason I'm doing my class, and I thought about this, I was trying to figure out how to make people think about this, but we have a swimming pool, and my daughter, I have a 7-year-old daughter, and years ago, she was afraid of the water. A lot of kids are just afraid of the water because they can't swim. And she would wear the little life jacket and the water wings and all that kind of stuff. And she would get in the shallow end and all that kind of stuff, right? But as she learned to swim and learned what to expect and how to handle it, if she, got in deep water or whatever, she takes the water wings off, and now she's jumping in the deep end, as fast as she can, and she thinks it's the best thing ever. So that's kind of what I want people to do, is to have that feeling of, man, I can handle it. If the market does this zigzag or that zigzag, I'm psyched. I'm ready for it, right? And that's the way I feel. I'm like, you know what? Bring it on. That's awesome. I love it. If you've ever traded in a crazy market, again, you guys have seen what all I've traded through. You learn to embrace that kind of stuff, because you can make so much money in a more volatile market. What we've had in the last 5-6 years, it's been this straight up thing, and it's been great for buying long calls and all that stuff. But when it does turn, and we get into one of these, sell the rip kind of things, those will hurt, and you've got to have a different strategy to fall back on, right? And again, one's not better than the other, just different for different type markets. So embrace this and dive in the deep end and learn how to handle it, right? So here are the packages that we have. Again, very cool. This is gonna be fun. It'll be a lot of fun. And again, we've got some cool live trading, either 2-day or 4-day of live trading, and we will put on some trades and see how this works. So with that, let me jump over here to the questions. And I did want to mention something, Daryl, if you are listening, you guys would just get a kick out of this. I meant to mention it earlier. So before we get into questions, I was showing you guys the chart on Bitcoin, and I remember back, it must have been 7-8 years ago or something like that. Daryl told me to buy Bitcoin, and it was $600 Bitcoin back then. And I was like, what is Bitcoin? And of course, we all around the office bought a little bit, and, went from 600 to 1200, like, woohoo, doubled your money, and, you sell it, right? And, of course, I am still here, and I'm not on a private island, so I didn't put, $100,000 in at that point. But, Daryl, if you're listening, I remember the night you told me to buy it, because we were actually doing a class that night. But anyway, crazy stuff. So let me jump over here to the questions and see what everybody is thinking. Frank, how's it going? Let's see. Yeah, Frank has been here. So at St. Simon's, again, another side note, we do a live trading retreat here, and we did it every year for, I don't know, 5-6 years or something like that, I guess. And then COVID hit, and we weren't able to do it, and we're not able to do it this year. But we will do it again, and I will let you guys know when. Let's see. And Frank, I can talk to you guys tomorrow in the bias if you want to get more details on all this. Roy says 16 years to recover. Yeah, on the NASDAQ, yeah, 16 years. Crazy. Warren, yeah, the problem is more than just the Fed. It's all the central banks acting collectively. Absolutely. It's coming, And again, I'm not trying to scare anybody. I'm saying be happy, when be prepared more than anything, so that we're the ones making money when it hits the fan. Sean. Okay, Sean says, why use a calendar, not a butterfly, to cast that net? Different. It's apples and oranges. Not to get into too much on the Greeks, but a calendar is positive vega and a butterfly is negative vega. So if you're on the downside, you want positive vega if you're trying to cast a big net that way. Now, butterfly can be very effective. Again, just depends on what you're trying to do. I like butterflies, but it kind of covers a different, it serves a different purpose, I guess is the best way. If that makes sense. Stay says, what size account would these trades be suitable for? Great question. Thank you for asking it, because I forgot to mention that. The trade can virtually work for any size account because it is easily sized up or down. In other words, for example, if we're using SPX, just an example, because I like trading the SPX. You don't have to worry about earnings, and you don't have to worry about early assignment. You get tax benefit for doing it. Not supposed to say that, but you do. But if I'm doing 10 contracts, then, and if you want to size larger, you do 50. If you want to size smaller, you do 1, or use SPY instead of SPX, things like that. So it's easy to size it up and down. And our goal is still the same. If we're trying to make, you saw the returns, if we're trying to make 20% on the money, and use less money, you have the same percentage return. So I used to tell people for bias, $10,000, but I like to have more trades on than that. So, it can go higher or lower. Again, it's very, very flexible. So I hope that makes sense. And again, thanks for asking that. So you take one contract, the price about 10% of those numbers. Yeah, well, it's more than that, but again, the strategy is, this is not one of the strategies, if we were talking about doing end of the day butterflies or something where we put in, $100 and we're trying to make 5,000, that's not this kind of strategy, but it's not got the risk, that something like, lotto ticket thing would have, right? Hey, Corky. Yes. FedEx and Amazon calendar spreads. Yes. SB. So the triple play itself is a combination of these and variations of these. And, we may daisy chain these things together. We may evolve the trade over time. In other words, we may start a trade that's 3 weeks out and then add to it as we go. There's quite a few variations of it. PP, how's it going? PP says, what is the main difference between calendars and diagonals? And why do I prefer calendars? I do prefer calendars. The biggest difference is the structure. The calendar gives you more exposure to, in a positive way, to volatility. Diagonal gives you less. Now, you can dial up or down a diagonal as far as volatility, but you still can't get the bang for the buck that you can out of a calendar. It's really hard to. And if you do dial up a diagonal, you're going to have more risk on the tails, than you do on a calendar. Again, that is not apples to apples. That's like red apples and green apples. They're kind of similar, very, very similar, but they're used for a little bit different things, if that makes sense. A sour Granny Smith apple versus a red sweet apple, they're very similar. They're the closest, but they're still used for different things, right? And Lorna, thank you. I just saw that. Thank you. Let's see. Caesar, yes, the alerts are only if you're in the live trading, correct. Yep, the pro and the elite, yep. Let's see. Bendra, how many trades do you have going on at any given time? What is a good account size? Okay, so the question is how many trades you have going on at any time. I will personally, I like to have about 3 to maybe 5, three, 4. Um, right now I've got 3. And that's pretty average. That's pretty average. It is, I won't ever have 10. Sometimes if the market gets crazy and I'm trying to dial it back, maybe I have 1, but you know, and again, that kind of goes back to the sizing thing. Um, the strategy, it's kind of like if any strategy we're doing, if we're doing iron condor, butterfly, or whatever, um, and we're trading a different size account, we just adjust the size of the trade, number of contracts to that size account. It's just like everything else, right? Sergio, you show profit long way after the middle point. Where does P&L does not show a profit? Yes, Sergio. So just like a butterfly, I guess is the best kind of comparison. Your profit increases over the life of the trade, and that's by the nature of the theta that's coming in. But this one has a kicker of volatility too, which can kick it up even faster. But it's kind of one of those things that we hang around long enough to get what we want out of the trade, and then we're out. If you have a butterfly just as a comparison, you really want to hang around kind of to the bitter end, kind of depending on how you're trading it, to get the max profit. And this is more of a we'll hang around long enough to get the profit we want. So that will increase each day that you hold the trade. Let's see. Robert says, do you provide trades through the year? Absolutely. Not with the mentorship. I mean, not with the class here, but I do in bias. But again, and even in the main room, but and you're welcome to to check that out. But the purpose of this is to get you on your own, to be able to do these on your own once we get through the live trading and all that kind of stuff. And you'll have all the ability and the knowledge and the reference materials to do that. And of course I'm here to answer questions and stuff like that. Randy says, what is the smallest size account you could reasonably follow the system? Again, it's so hard to say because you could literally do it. I mean, if I had to just have a number, I'd say $5,000. I would prefer 10, and it's even a little more comfortable with 20. But that's like any strategy. If you were going to do whatever, fill in the blank, whatever kind of option strategy we're going to talk about, credit spreads. You can do that with any size account, but you just do it on smaller size. And to me, if anyone that's trading a smaller account, and this is just the truth, your number one priority is to build that account up first. It is easier to it's easier to trade $1 million account, of course, because you got flexibility and you can have bigger swings and all that kind of stuff, right? But if you are and not you specifically, but if people are starting out and they have $5,000, $10,000 account, my goal would be to build a $10,000 account up to 20, 25, and then kind of start spreading my wings out a little bit and keep doing what I was doing to build it up, and then maybe add on a little spice, in there and try to do some other things. But here's the problem. If you have let's just say $5,000 account, I'm just making a number up, if you have $5,000 account and you're swinging for the fences and you have something that blows up and you lose $2,000, well, now you got 3,000. Now you really have a hard time trading because it's hard to do much with 3,000, So again, if it's the whole singles and doubles thing. And this is probably put it in perspective better. One of my mentors, you probably heard the story before. It was kind of so true. Back a long time ago, one of my trading mentors, we were walking to lunch one day and walking, talking about this. And he said, if you see $100 bill laid on the sidewalk, what are you going to do? And I'm like, I'm going to run and dive on it, and grab it and curl up in the fetal position and hold it, and that kind of stuff. And then when I get back to the office, I'm going to tell everybody, you won't believe I found $100 on the sidewalk. Wow, my lucky day. But you make $100 on a trade and you're like, no big deal. I want more. I want 500. And we're all like that. That's wired into us as traders, honestly. So again, not that we're trying to make the little, as little as possible. We're trying to make as much as we can, but we want to be consistent and all that kind of stuff. So everything is based around the size of the trade relative to the size of the account. So I know that's kind of a long way around the world to tell you that, but it's kind of a funny story to tell you that as well, because that really did happen. That's still stuck in my brain even to this day. Let's see. Todd. So Todd's got to be careful that anybody can do fibs comment. Yes, exactly, Todd. Yes, anybody can do it, but not anybody can do it correctly. That's why I use their work. I can do it, but I trust their work. It's funny. It's true though. Let's see. Dave says, I'm new to charts. I know moving averages, and that's about it. If I take the class, am I putting cart before the horse? No, actually, Dave, I would say this is one of the least technical analysis strategies probably out there. We can do everything off moving averages. Keltner channels, that kind of stuff. The basic things that I use are free. It's free stuff on Toss or Tastyworks or Ninja or whatever you use. Again, I do use Voodoo lines, but it's more just levels that I'm looking at. So again, these trades, I'm not looking for something to fire short and fire long and tell me exactly when to get in, because remember, we're throwing a big net, right? Sorry, guys, I had to take a drink of tea. My throat's getting a little raw here. Got allergies. I've got some hibiscus tea. If you've never had that, it's pretty good stuff. Good for your blood pressure too. I like to be calm when I'm trading. It takes a lot to get me worked up in a trade. All right, so Dave, I hope that makes sense. Mustafa, is the calendar strategy adapted only in the event of a decline? No, not at all. In fact, again, it was developed or kind of created, I guess. I didn't create it, but it was shown to me by mentors years ago. But it was kind of created for a flat market that's not going anywhere, choppy kind of market, because then you can use a neutral setup and it works great, especially if you branch it out and make it wider and that kind of stuff. But it can work extremely well in a more volatile market, and you have to watch your volatility and all that kind of stuff. And that's, we can't get away from that, so we might as well put it on our side. Let's see, Jason, are you going to teach all strategies available or only a select few? You said Iron Condors go for. Jason, yeah, okay. Lorna, yeah, thank you. Yeah, no, we've got classes on each one of those. I mean, for example, I probably got 2 or 3 classes like just on iron condors. I mean, that's a whole lot of material. So no, we're just going to be talking about this specific type trade. Sam, yeah, thank you, Sam. I forgot to mention that these are debit trades. There's no margin required on these trades. It's a simple debit. So in other words, if the trade is, if the trade cost $5 and we do 10 contracts, it's $5,000 debit. If you do 1 contract, it's $500 debit, that kind of thing. Debits, no margin required on this. Dave, if I don't want to be a slave to my computer, can I do this and still have time to enjoy life? Yes. Yes. They are, they're designed to be, to be hands off. And again, typically, for most of the ones we've been doing in the last couple of years, we've been doing shorter time frames. But yeah, absolutely. In fact, I don't know of any other strategy that's less hands off except maybe covered calls. There you just put it on and forget it. But chase again. So chase is how much time is required to manage. If you can watch the price of the vehicle we're trading, for example, SPX or NDX or whatever it is, and you have parameters. If it goes, here's the ends of the trade, and as long as we're between these ends of the trade, nothing to do, no problem, that kind of stuff. So it honestly doesn't require a lot of sitting at your computer watching, and I guess it's probably less than most other trades, but that kind of goes back to the market. If the market's crazy, then maybe we're adding more trades or taking them off, or trades inevitably will have to be managed or defended, but it takes probably less time than any other thing that I know of. Let's see. Mustafa says, how do I take advantage of single bought without getting burned? Again, that kind of comes back to trade management. It's like anything else, any trade we do, if it starts to get in trouble, we have a pull the plug point, or we have and I have a checklist, here are the things to consider if we're going to stay in the trade and defend it, or we're going to pull the plug on it. And we just decide, if it looks like we don't need to defend it, we just pull the plug and we're out. That's how you keep from getting burned, as you say. All right. Neil, all right. Thank you. I appreciate it. Okay, so Lorna, and thank you. You're on top of this. Thank you. All right. Alam, how does this differ from selling covered calls and selling puts? It's much less expensive than covered calls. Very, very different, completely different type strategy. I mean, that's apples and oranges. And selling puts, those are margin trades, and what we're talking about is a debit trade. So it's totally different. Chris, we don't typically trade after hours. So they're during the regular trading hours. Dave, yep. So you can use this stuff as hedging, and I showed you guys how we would set something up, generically set something up. If you have in your portfolio a bunch of I don't know, Amazon stock, I'm just picking something out, then we could build something to hedge the stock on the downside, or we hedge the index. In this case, if it was Amazon, we would hedge the NASDAQ to protect Amazon stock, right? Canadian, do I need bias as well? You do not. You can. It's always cool. We do these, in bias, but no, you don't. Not at all. Not at all. All right, guys. And Chris, okay, yeah. Chris, Lorna, got that? Okay. Flip for flop. Bruce, during the years of sell the rally, did you ever maintain long-term positions outside of daily, weekly trades? Not many, because if we were still kind of in that for the until the shock is over, you're still in the buy the dip mode, and then you get your hand burned, a couple of times, and you realize that the trend is down, and you think, oh, it'll be over in a couple of weeks, and it lasts a couple of months, and months turn into years, and that kind of thing. So no, we were trading at much shorter time frames, kind of like we're doing now, honestly. And we went from maybe 60, 90 days out to weeklies and 30 days, 45 days out, maybe something like that. But we're just looking at charts. We're all just looking at charts, trying to decide, which way it's going to go. All right, guys. Well, I went over my time, so I appreciate you guys being patient. Hope it was helpful. If you have any more questions, of course, let us know. Let's see, today's Wednesday. If you're in bias, we'll talk tomorrow. If you're not, I'll be in the main room. The next time I'm in the main room, if you're in there, of course, I can help you or we can talk then. But and we're going to do a Q&A on this. I think a follow-up here. I believe it's next week. So if if you want to talk more detail, that'll be the time to do it. And I'm sure you'll get a follow-up email or something on that. But other than that, I don't want to take up any more of your time. So let me jump. I really appreciate everybody being here. Seriously do. And, this is a great strategy. I know it can help you. So think about it and sign up for one of these, and we'll put the plan into action. So thank you guys for the time. I appreciate it. And I will talk to you soon. Take care.